Hey everyone, thanks for checking in to our latest Traded Black Small Cap Sunday edition. Well, had some great success here in the last couple of weeks. A lot of referrals from you, the viewers. We appreciate the feedback. Tonight, we look at 4 more companies, including, as usual, our last pick, a cannabis company. We kick things off with a well-known restaurant chain that includes a celebrity co-owner, as well a casino company. And who doesn't like cash? All that and a couple more companies that we focus here on the Sunday night Small Cap Sunday podcast. So let's welcome in our analyst and lead financial writer, Bill McNarland. Good to see you. Happy Sunday evening.
Hi, everyone.
How was your week?
Oh, it's been great and excited about this show. We got a lot of good names, did a lot of research, and thank to the viewers that submitted some names. I found some companies I wasn't familiar with, and they turned out to be pretty exciting.
So, it's even more exciting because we are putting in all these, like what companies we need to qualify. Because as we said before in this small cap show, we look at companies that are valued between 250 million and 2 billion. We've had some people and quite a few people reach out where companies are not valued at 250 million. So, not this week, but the following Tuesday, we're going to kick off every Tuesday at 4 o'clock. We're going to launch what's called YOLO Tuesdays. This is a deep dive into microcap companies. So, these are the types of companies we're going to have to go through a lot of research, a lot of qualifications. We don't want to be promoting a lot of pump and dump style companies, but these are companies that have huge upside potential. We will do our math, and I know that you will be digging hard for that, Bill. So in addition to small cap Sundays, we're also going to focus on micro cap companies, and that's going to be airing on our YouTube channel every Tuesday at 4 o'clock. So it should be exciting, right?
Yeah, I'm looking forward to it. There's a lot of people that have interest in using call options right now on companies to be able to try to make a big upside.
Yep.
But I think this is an interesting strategy because call options, if you're not right in 6 months or a year, you lose your money. But with these companies, you can hang on to these for many years while you wait. So I think this is an interesting YOLO strategy to swing for the fences with some of these micro caps instead of what some other people are doing instead.
I like it. Swing for the fences, right, brother?
Yep.
All right. So tonight, Small Cap Sunday, 4 companies again this week. And you know the drill with one of them, including a cannabis company, which is actually a Canadian company that trades on the CSC. The other is a well-known restaurant chain in Canada, the U.S., and Mexico, which includes a celebrity co-owner, Jim Tree Living. He was actually one of the hosts on the show called Dragon's Den for 20 seasons. And for those that don't know who Dragon's Den is, it's actually where Kevin O'Leary and Robert Herjavec, am I pronouncing that? Herjavec? Herjavec. Sorry, apologies for that. He is actually both of those guys now hosts on Shark Tank, began their television careers on the Canadian show called Dragon's Den. Jim also has a son, actually, who's the general manager of the NHL team, the Toronto Maple Leafs, which is Brad Tree Living. So, well-known family name across North America. The company is called Boston Pizza, 372 locations across North America. Before we get into this, as usual, all views of the Traded Black podcast and the guests on this podcast are purely opinion. You should not treat any opinions expressed by us or guests as investment advice. And the views on this podcast are solely intended to be informational and are not investment advice. As I said, this show is all about valuing companies between 250 million and 2 billion with great free cash flow, strong margins, healthy credit score, and more. So as I said, off the top, first company, Boston Pizza, trades on the TSX, Bill, under the ticker symbol BPF-UN. Why do you find this company interesting?
Well, I like to compare it to what we talked about last week. We looked at Portillo's, McDonald's, Shake Shack. This is a completely different animal of a restaurant. If you look at the symbol there on the screen, TSX BPF, notice there's a hyphen and UN. This is a royalty trust.
Okay.
So this is very different in the fact that investors are just earning off the top line of these restaurants. They're not responsible for operating costs or any of this or the cost of the food. They're just simply getting 5.5% off the sales of 372 franchise restaurants.
Making money while you sleep, right?
Yeah, remember last week we talked about the increases in food costs and how fast food restaurants are getting more expensive and it's
Yes.
cutting into margins. And this was a big issue. Well, this is completely different. If the check is larger when a family goes out to Boston Pizza, the investors earn more, 5.5% off the sale at the restaurant. So this is just a top line structure. I love royalties. Actually, I
Yeah,
wrote
no
a book
kidding.
about royalty financing that I published. This is a really unique structure compared to all the other challenges traditional restaurant investments can have.
So royalties again, percentage 5 point, what'd you say?
Yeah, it works out to 5.5%. It's 4% off the top, and then there's a 1.5% comes from some underlying investments for a total of 5.5. And this company is just responsible for the administration costs of doing this.
Yep.
All the things like food and operating costs, employees at the restaurants, this has nothing to do with them. They're just collecting like the tax man a percentage of every check at the table.
372 locations, as you said, and that's across Canada, the US, and Mexico, correct?
Yeah, correct. There's even a restaurant I've seen in Tijuana, Mexico.
Really?
There's a number of them through the U.S. as well, but they're a real bread and butter thing in Canada, across Canada. They're a well known franchise.
Well, co-owner Jim Tree Living, he's big name, that's for sure. Nice guy too, very nice
Yeah,
guy. Actually
absolutely.
had coffee with him at the Shangri-La in Toronto a couple months ago. Very approachable, super nice guy. All right, let's go to the charts. Focus on the first thing, which is revenue. What did they report for the year last year?
Yeah, it's $101 million, and it's a
Okay.
Canadian company. But on this show, we always quote everything in U.S. dollars if there's a dual listing.
Yep.
They had revenue growth in the last 12 months at 2.5%. Over the last 3 years, it's been 14%. That's a little higher than expected because remember, we came out of COVID, so that number is a little bit artificially high.
Yep.
But what happens with this business is they're just slowly growing and you're adding to your royalty stream and you're getting a larger dividend from it.
Yeah. Well, we all know location's everything when it comes to this. And they've got some great locations for sure. And around, I would say a lot pertaining to obviously the hockey community across Canada is a big one for, this restaurant chain, which you can only imagine the amount of friends, family, parents, and teams that, well, even outside of that, but of household consistency. It's almost like the Applebee's of like football, with college football and high school football in the US. But do they provide a dividend?
Yeah, so the dividend yield is 8.6%, and the dividend growth in the last 12 months was 9.7. So we
Okay.
remember on a previous show we talked about this 2 or 3 weeks ago about how to calculate the expected return of a dividend-paying stock.
Yep.
You can add those two numbers together. So this is a very intriguing investment to have a high yield and to be having a growing dividend as well.
All right, let's now look at their current levered free cash flow along with net income. What can you tell us?
Yeah, so they had $37.8 million that they had in free cash flow last year. The year before that, about just under $37 million, and then they had net income about $29.8 million, which is quite similar. But the thing that is so unique about this company is how they get that amazing cash flow. Is they have 100% gross marginal profit they collect. There's just
Wow,
nothing coming off the top, and they
which is
have a
unusual.
little bit of expenses and taxes, and the rest just goes out to shareholders.
Something you don't see a lot in this industry, right?
No, like so on the remember last week we did a $10 checkout analysis of the
Yeah.
companies. If someone spends $10 at Boston Pizza, um, a unit holder would end up getting of their portion of the amount, they would get $7.51 after taxes.
What was the number
So
that you shared last week with Walmart for every $10 to spent? Walmart makes what?
it was about 6 cents. It was very limited. There's a lot of expenses that come out, and so this is something that was is very intriguing to see so much of that there.
That's healthy. Finally, what's their credit score?
Yeah, their credit score is no surprise here. It's 7, so it's huge, right?
Strong. Yeah.
Yeah,
All right. So, moment of truth, and I think this is going to be our first check mark here this evening. Would you buy or own this stock?
absolutely. I love dividends and I love growing dividends and I love simple businesses that they have the operating costs pushed out to a different business partner.
All right. TDR, Trade to Black, Small Cap Sunday podcast. I'm your host, Shad Dales, along with our analyst and lead financial writer, Bill McNarland, talking about our 4 latest companies that we're highlighting. So, Boston Pizza is in the books, and this is a stock that you would own. Next up, We now have a company. They're actually based out of the state of Georgia, called Danimer Scientific. It's an environmental company who's come up, I would say, an interesting concept that pertains to biodegradable. Their concept sounds interesting. However, when you're looking at, and I first glanced at this, they're spending a lot of cash right now, Bill. So what can you tell us more about this company? It's actually, what's it trade on? It trades on the New York Stock Exchange
New
under the
York
ticker
Stock Exchange, yeah.
DNMR. But tell us more about what's, because
Well,
they got some concepts that work in some areas, but obviously not in others.
great idea. I've noticed anytime I went around the world to a beautiful beach, typically overnight the tide comes in and leaves a bunch of plastic garbage, no
Yeah.
matter how beautiful of a place that you're at. And that's just because we have this problem that we have so much non biodegradable plastic. And so they have a plastic that they created. They have 430 granted and pending patents where they have
A
basically
lot.
they can make a milk carton, a plastic milk carton that if someone disposes of it wrongly, put it in the ocean, it would be degraded in about 60 days. So this is an amazing concept and idea.
Yeah. So on paper, it sounds good, but what's actually happening under the hood?
Well, they have customers. They have customers like Starbucks and Dunkin' Donuts and Walmart and such. But it's the cost is considered too high. And we can see that when we start looking through their revenue projections and their gross marginal profits. It's a real challenge with consumers to be able to pass on the actual costs for doing this.
So what do you think has happened here? Like when we look at the original business deck back in 2020 to where we are today, like what's changed?
You know, I'm not going to sit up here and say, it's business is easy, but there was misprojections, and this can
Yeah.
happen in a business. So for example, when they came out public in 2020, I have their original investor deck I'm looking at, and they thought the revenue pickup in 2024 would be 10 times higher than where they actually ended up in 2023. So
Hmm.
the customer pickup just hasn't been there. Now, I was looking at a survey. It's a little bit dated. It was 3 years old,
Yep.
but it was surveying consumers, and it found that 65% of consumers want to be environmentally focused, but only 26% actually do so when they're checking out.
That doesn't
So
surprise me.
a lot of people have the good intention, but when they see another product that's significantly more expensive, often they'll change their view.
Convenience takes over, right?
Yeah.
Yeah. All right, let's go to the charts. First up, revenue from last year was what?
Yeah, so their revenue was 45 million
Okay.
that I shared with you, and that was compared to a prediction that in 2024, this year in their full year, they would be 455 million. So we can see how
Wow.
the company just did not grow as expected, and we
Okay.
see that in their year to date. Their revenue is down 10.8%, and over 3 years, their revenue has been essentially flat, slightly negative.
Is there any hope as far as near-term growth catalysts for the company?
I think they're early. I think that's the problem. I think this is a really good idea. But when it comes to having good ideas, is is it the right time? And do you have enough cash in the bank to wait out until it is the right time?
When is
And
the
that's
right
where we
time?
start to look at
Yeah.
these numbers.
I guess when is the right time for a lot of companies in this space? Are we still another 10 years out or that long?
It could be, and I always go back. It's an old story, but the first railroad companies in America weren't the ones that made the money. It was the companies that came after, right?
Yeah.
And so I just think this company has amazing technologies and patents that are valuable, but they're just early.
Yeah. Moving now to gross margin, and wow, this is a number to stare at. And I don't mean that in a positive way.
Yeah, negative 53.7. So when you think of that, they produce $1 of revenue, that's costing them a dollar 50, a dollar 53.
Yeah. And
So
levered free
can't run a
cash
business
flow and
like
net
that.
income. Are you seeing?
Yeah. So last year they had negative cash flow of leverage free cash flow of negative 67 million, and the year before that negative 172. So when you compare that to their market cap or their revenue, you can see where that's such a problem.
Yeah. I always bring up the question of near-term growth catalysts because I know a lot of the times we also want to highlight companies that are actually heading in the wrong direction. But I think it's important, and I think a lot of retail investors like to see this when stocks go down, they think, is this a time to buy? But I think that's important to show and basically to indicate what their current finances are and if there are any near-term growth strategies in place In this case, there obviously isn't, but that's always something that I think a lot of investors need to be mindful of, because anytime a stock goes on sale, the first question needs to be asked is, why is it quote unquote on sale, right?
Yeah, and I looked at the industry as a whole. I was surprised. So I did some research to say how much is biodegradable plastics expected to grow over the next 5 to 10 years,
Which
and
is,
I was quite shocked. Over the next 5 years, the expected growth is 10.1, and personally, I would have thought it was way higher.
yeah, me too.
Like I think this is amazing stuff,
Yeah.
but the demand is just not there.
Yep, and the old guard ain't going away anytime soon either, especially when you get a
Yeah.
Trump administration in place. But I don't want to sit here and say they don't care about the environment, but he likes his coal, right? All right, finally, their credit score shows what?
Negative 1.3. So on
Yeah.
the show so far, this is the first one we've had in the negatives.
Mm-hmm.
So it's challenged. So we see
Well,
negative gross margin and negative credit rating for the first time on our small cap Sunday.
all right, cue up the red X, because moment of truth time. This is obviously a stock that you would not own.
Yeah, correct.
Yeah. All right. Shift now to our third company here this evening. And it's time to bring in the lights and action, camera in action, because who doesn't like money? It's our first casino company that actually we've covered here on the show. It's a company called GameHost. It trades on the TSX under the ticker symbol GH. What can you tell about us as to why this company is interesting, Bill?
Well, I'm really interested in casinos,
Who isn't?
either running the statistics of being a player or running the statistics of being an investor,
Yeah.
and they both have a lot of risks. And so the goal is to find the lowest risk way of trying to make some money, whether you're playing or if you're buying the company. And so this is really interesting. This is an Alberta-based company based in Red Deer, Alberta. They have three properties. I'm familiar with the three properties. They have there's they have them. They focus on being in economic centers that are mid-level cities that
Yep.
don't have a lot of entertainment choices. So they
Okay.
have a property in Fort McMurray,
Smart.
Alberta. They have one in Grand Prairie. These are high-income places, and I'm not going to say that there's not a lot to do in the winter. Let's say when it's cold outside and you can't go hunting or fishing. These are good
Yeah.
options for entertainment.
Yeah, these guys go up and work at the oil wells in 12-hour shifts. They only got the only one show in town. You're obviously going to benefit from that. My question is that do you have a strategy that you can explain to your wife that you're going to put a lot of investment dollars into a casino stock? What do you say in that situation?
Well, this is a really interesting company. Let's now
Yeah.
just look at it. Forget that it's in the gambling business. Let's just look at the numbers like we do all other companies and
Yeah.
see how they come out.
So one of the things I want to just find out of the industry is like when investors, what should they pay close attention to when it comes to casinos? Like for example, you'd said 2 weeks ago, Spirit Airlines is currently selling on 81% of their inventory, which we've learned is a kiss of death in the airline industry. You need to be at 85% or higher. So what can you share with us about the casino space? Because, many obviously think this is a lucrative industry because the primary focus is money, but then you look at somebody like, Donald Trump, who obviously didn't have success. But what are some of the things that come to mind when focusing on what's a good company versus a bad one in this space?
Well, let's talk about the challenges in general in this industry. I met with a famous investment banker that only specializes in casinos, and I
Okay.
sat down with him for an hour and a half, and he was telling me the things he looks at. One is the challenge of the industry is if you're going to build a new property in Las Vegas or somewhere else, you
Yep.
have to build other things to get people in, and that's very expensive. You have to have a mall, you have to have, great restaurants, you have to put up, an Eiffel Tower or something to get people to want to come in and take a look. That's really expensive spending. And then you get and that's often financed with debt and such. So that brings risk when there's something like a recession, or if you miss the mark and people aren't overly interested in your concept. And we've seen famous investors that have invested very heavily in casinos. They felt that they understood how to get the mark. And we've seen in examples in Las Vegas or Atlantic
Yep.
City or Macau where famous investors have lost a lot of money in bankruptcy because they missed the mark.
Well, when I saw the documentary of Trump and what he built in Atlantic City, like he did not cheap out on anything possible, was in way over his head. But it's interesting because, like you said, you got to have something just outside of the actual slot machines and roulette tables, and when I think of Encore, Wynn, Cosmopolitan, they've got it all done right in the Las Vegas casino because there's like unbelievable restaurants and so many things to do. And let's face it, the pool parties are pretty cool to check out too in Vegas, but that's how you get people lured in. Okay, let's now go. This company is, you said, based out of Alberta, Canada, Western Canada. What do
And this,
you, go
yeah,
ahead.
let's talk for a second about what's so beautiful about this compared to what we just discussed. When you're putting a casino in Fort McMurray or Grand Prairie, you don't need a fountain, you don't need a miniature Eiffel Tower. People are going to come there, and that's why I like this, because they get the same bang for the buck of people. They don't have the competition, and so they can just focus on their core business. And so this is what I'm looking for when I'm looking at a casino type business. And when we look at the numbers, we can see how this tells a very different story from the casinos in places like Las Vegas.
Yeah, so let's highlight the revenue and their
Yeah, so
healthy.
their revenue was $84 million last year US.
Yep,
They had revenue growth of 12.7 over the last 12
impressive.
months and 34% over the last 3 years.
Wow.
And they got some good catalysts here. Like gambling globally is not growing that much. It's similar to alcohol. It's around just under 4%. But the other thing about Alberta is it has the highest interprovincial migration in Canada and had population growth of 4.4% last year as well. So the properties aren't keeping pace with the population growth, especially in these northern communities.
Well, they got to make it an entertainment complex, that's for sure, because the emergence of online gambling has exploded, and I know that's extremely tough and a completely different conversation. But a lot of these brick and mortars, they have to make it a destination, right?
Unless you're in a place that you don't have the options for the destination, and that's why it's so beautiful.
Yeah. Okay. Levered free cash flow and their net income. What can you share with us?
Yeah, so they had $23.5 million of leverage free cash flow last year. The year before that, 18.4 million US dollars, and this comes from their healthy gross margin profit of 49.6%. So that's allowing them even to put out a substantial dividend.
Strong. Okay. Finally, their credit score. What are you showing?
So their credit. So this is an interesting point. The reason that all those Vegas casinos or Atlantic City or Macau went bad was because of debt.
Mm-hmm.
This isn't a concern with this company. So their credit check was 5.6. They're
Strong.
very financially strong. And so you get paid to wait too. They got a 4.8% dividend in the last 12 months that grew at 33%. So that's
Wow.
how I think you explain to your spouse, as you're asking, that you're
Yeah.
investing in a casino. This is a dividend paying, consistent. I would say this is an example of a good, boring casino structure compared to the ones in other parts of the capital markets.
All
This
right.
this is what I like in a casino.
And again, they trade on what exchange again?
Yeah, on the TSX,
TSX
you
under
can buy
GH.
the symbols GH, or you can buy it over the counter in the US, GHIFF.
All right. Moment of truth. And I got a feeling you're grabbing your green marker check
Yeah,
mark. Yes.
yeah, I like dividends, and I like the casino business when it's run in a non flashy way.
All right. All right, green check mark. Speaking of green, let's now move to cannabis, our last pick of the evening on the show. Let's focus on a Canadian company, which I think a lot of people have heard about, but I think a lot of people need to know more about this story. A company called Next Leaf Solutions, which trades on the CSE under the ticker symbol OILS. I think this, for those that know or don't know, this is a company that focuses a lot on cannabis extraction, includes consumer packaged goods. And to further define that, that includes gummies, oils, pre rolls. And they're also doing some interesting things, including shaved cannabis ice. But they've gone through some changes as far as the executive team. There's a new CEO in place. And I think in a lot of ways, she's really enhanced the awareness and image of this company. So, what can you share more about this company, Bill?
So this company you would originally describe as an oil refinery, extracting oils. They have 70 plus patents in this area. They are a specialist, and they understand not only how to do it, but also how to do it safely. These are explosive things that you're working with, so they understand how to do that. But where they've shifted in the last couple of years is focusing on becoming a consumer packaging company, where they are actually using the oils that are extracted to produce gummies and pre rolls and oils that they're starting to sell now through the Canadian provinces of British Columbia, Alberta, and now moving into Ontario, which is their growth catalyst.
All right. So, new CEO Emma Andrews, just looking it up right now. Her background a lot is in marketing. She replaced former CEO Paul Peterson. So, I've always looked at this company that has had really good idea, but for years, I don't think just a lot enough people knew about what this message or what this company was actually doing. So, she's done like a decent job, I think, so far on creating more and more awareness. But what have you seen that I guess they has improved as far as their image since she's been appointed as CEO of the company?
I listened to a lot of interviews with her, and she made some good points. And I think she has a very strong understanding of the marketing consumer goods.
Mm.
So she looks a lot at the price points, how important, how much money do you want to spend on brand compared to not. So they're going into a mid-level brand strategy, but then they're coming to consumers with more value, larger packages, higher THC levels, and
Yep.
such. That is interesting to investors. Also, the thing that's interesting is they're very still boutique-ish. The revenue growth that they've had is just through really British Columbia and Alberta, but now they have the huge market in Ontario that they're moving into. So it's much easier for a smaller company to grow quickly than it is for the more established companies that already are well entrenched into those markets.
Okay, so let's move to the charts. Revenue last year was strong at $10.2 million, but looking even further, their LTM, very impressive. You want to highlight that?
In the last 12 months, their growth was 129%. Over the last 3 years, they've averaged 73%. So just to step back, the reason we included
Pause
this
for
company,
129%. I don't
yes,
think
in the
enough
last
cannabis
12 months.
investor yeah, not enough cannabis investors know that story.
Yeah, and in 3 years, it's been 73% a year. And so this is why we included it. It didn't make the cut of our normal size of a small cap, but we had requests from viewers to cover it. And when I saw these numbers, I said, you know what? Even though it's still smaller in the market cap size, this is interesting. But what's super interesting about this is they have all these patents now.
Yep.
Now they're profitable, which we'll talk about in a minute. They have these other sales lines. I'm very intrigued by the current management, but their stock used to be 5.5 times higher when they never had any of that.
Goes to show how this industry was so misled on crazy valuations in the early days.
So I
But
think that there's some room to move here for sure.
good to know. Levered free cash flow, net income. What can you share?
So last year, last 12 months, leverage free cash flow was positive, 228,000.
Wow.
And they had positive net income after paying their taxes, after depreciation of just under 600,000 US in the last 12 months. But what's interesting, they already spent their capex in designing all this refinery systems that they have.
Yeah.
So they had depreciation of almost 700,000 US dollars in the last 12 months. So that net income is actually much healthier than even that it looks at. So this is a fully profitable cannabis company after taxes, depreciation, everything is paid.
Yeah, let me emphasize on that. A fully profitable Canadian cannabis company. And that's impressive knowing like I just, the challenges that the obviously market has faced over the last couple of years and how competitive it can be. But that's impressive when you look at the growth year over year and what their 3 year average is 129% year over year.
Yep.
All right, moment of truth. Dip into that green ink again because I think you're pulling out the green marker.
Yeah,
3 out of 4,
absolutely.
yes?
Yeah,
Yeah.
yeah, absolutely. Yeah, I'd be very interested if and when looking for a cannabis exposure. I think this is a great name to add.
Yeah. Leave some comments below. We want to know, is there any companies you want us to cover? Smash that like button. If there's certain companies that you like on here, there's certain companies that we covered that you recommended to us, then smash that like button, share this video or network, and get this message to go viral. Also, as you said, and as we actually discussed an idea this week, and as I said off the top, YOLO Tuesdays. It's going to launch not this Tuesday, but a week from Tuesday. So 9 days from now. You mentioned just now about how Next Leaf Solutions, as far as like qualifying for the 250 million to 2 billion, Doesn't necessarily meet that threshold, but however, it is a great company when you look at some of the stats and numbers that you shared. So that's the whole plan, is to start diving into some of these micro cap companies and start really diving into companies with tremendous upside potential. And again, we're going to be doing our proper research to make sure that we are basically covering and shedding, I guess, some interest and light on companies that actually have upside potential and not the pump and dumps. I know it's going to be a lot of work, but I think there's going to be a lot of interest that pertain to it, right?
Yep. Look forward to it. And today we had 3 of our names came from our viewers. So keep sharing the names.
It's
And
awesome.
for our first YOLO Tuesday, all 4 names are suggested by our viewers.
Is it?
Yep.
Okay, don't say who they are. If you want to find out who those 4 names are, then log on to thedalesreport.com and subscribe to the Baked In newsletter. We're going to highlight as well. We look at other companies that we're going to be covering. So if you want to learn more, get ahead of the curve and learn about some of these companies that you're unfamiliar with, make sure to log on to the Baked In newsletter. It's actually right now below in the comment section below. We appreciate it. Bill, in the meantime, thanks for checking in here at the Traded Black Podcast, Small Cap Sunday, and we will see you next week. Hey, everyone. Thanks again for watching. Hey, we're humming along, and it's all because of you and the audience and community that we're building. So again, make sure to smash on that like button and leave lots of comments. Who do we have up next? You let us know. Who should we interview? What companies? Is there anything you like? Is there anything we're missing? We're all here for you. Let's get on with each other and build this community for all of us to benefit. As usual, don't forget to subscribe to our channel, because in the end, we wouldn't be here without you. Thanks again, everyone.